The four-step method to high-performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. Building your discipline and confidence in live time is how you will be able to produce those results consistently over the long term. The 7-step daily routine for high-performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. Let's get started. G'day traders, Stacey Burke from Stacey Burke Trading. Today we're going to be reviewing the simple concepts of 90-10 trading setups. Easy money making trading setups. Now what's critical about today's video, what I want you to grasp out of that is understanding the levels. I have repeated this in several videos, the importance of understanding targeting the daily range. The daily range. We're working from signal days. Signal days come from the daily time frame. Regardless of the chart time that you're using, it's the daily levels that help us identify the signal days, the days of the week, and most importantly, yesterday's high and low of the day levels. So really important for you to grasp staying out of the inside. The trades that come from the inside, if you are taking those, will come in the form of a parabolic coil. And that is usually what comes from the day zero template, a 3-day setup. A 3-day rectangle that forms a box. A 3-day rectangle that forms a box that once it breaks out, goes on a range expansion. But today we're going to be talking about one of the most powerful explosive setups, and that's the parabolic short squeeze, page 90 in the playbook. Now typically, as explained in the playbook, the parabolic short squeeze builds up over 3 days. So when you understand the concept of a 3-day buildup, that is building up order flow for an explosive move. And often on day 3, all time frames are involved, and traders are chasing what they perceive to be a trend. They're chasing the trend, and lo and behold, when that market reverses into the short squeeze setup, it explodes violently and does not come back. But the best part, and I keep reinforcing this to traders, that I am targeting setups that are going to go from level to level. So when you're marking up little bars and counting pushes and everything else on the inside, for now I'm going to call that diddling until your expertise matches your results. In that you build confidence through accomplishment, stay with the levels. If you don't have the patience and discipline to wait into the timing window for a setup to evolve from the levels, those are the trades that can be 50-50. They're the ones that can get you caught into a choppy market before it gets to a level, or in a market that may not be going anywhere, or a market with low probability on the day. We're talking about targeting explosive opportunities. Now we have identified several, not multiple types of templates where we're targeting level to level. Now my response in a lot of cases, traders want to know immediately, what instrument is this? And my response always is the instrument is irrelevant. The instrument is irrelevant. It's the setup. It's the setup. Timings, levels, behavior of price, behavior of the trader. And this is where things are getting unstuck for some people and coming together for others. Some traders are still chasing movement inside and calling that a setup, where other traders are just sitting on their hands and waiting. Patiently waiting, sometimes just until the backside. And as several traders proved again today, 1 or 2 explosive, scalable, parabolic opportunities can significantly compound your trading account. And all you have to do in between is sit on your hands and wait. Chasing gobbledygook and gibberish is what can potentially allow you to catch a move, but you're missing out on the scalable opportunities, the ones that are ACB. They aren't coming back. Now, here's a great thing to think about. There's a lot of traders and other people who disagree with my approach to the markets. But let me ask you this question. If this setup, regardless if you were going in the long direction or the short direction in this particular type of template, would you really care what anyone else thinks if this was the setup you were hunting and you can identify this opportunity 3-4 times a month in any instrument? Do you really think it matters how many other little trades you miss out on if you're targeting scalable opportunities that when your setup presents, you can scale in and it's not coming back until it reaches its target? And this is where I keep repeating to traders, levels. Stay away from the gibberish inside. If you have opportunities later, as your skill set proves, for opportunities coming out of a parabolic coil on the inside, until then, stick with the opportunities that come from the levels into the timing window. Now, here's the thing. I can't stop you from taking trades everywhere because a lot of traders just want to trade. They want to get in the market every single day and take a trade. They want to catch a move. They want to grab some pips. And they're missing the whole concept of rinse and repeat and targeting opportunities that can really, really make you a lot of money when they present. And in between, doing nothing else but sitting on your hands. Not engaging in any impulsive, random trading, 50-50, 30-70 taking trades, or degenerative gambling type of behavior. Now, who wouldn't want to be targeting trade setups like this? It bewilders me to think that traders are willing to chase all kind of 50-50 stuff instead of hunting out opportunities where they almost can't lose. And then when they do identify these opportunities, understanding and having the patience to scale in, lock in some profits, or hold till close. Now let's look at a few examples from today. It's Wednesday, day 3. Day 3, number 1, is a signal day all in itself, by itself, every single week. It's the 3rd day in the trading week. Now I repeat the same things in every video, and I'm going to say this again. There's nothing new under the sun. The markets only do 3 things. They've been doing so since the very beginning of markets. The trader does all kinds of things different every single week. That's the whole dilemma that the trader individually faces themselves. To correct their variable behavior and become a constant in a sea of chaos. Now, Monday's the opening range on any instrument. It starts at Friday's closing price. Friday's closing price is where everything starts from on Monday morning. Whether there's a gap, no gap, it's irrelevant. Tuesday, day 2, typically expands the range. Now, if we have a large range Monday, we may have a market that coils inside or reverses inside. But Monday's opening range establishes the new high and low in a new week. Midpoint, Wednesday, day 3 on the front side of the week. We can target 2 types of trade opportunities in a well-engineered template if they present a trend trade or a reversal trade. When we go and look at our short squeeze from the playbook, now the basic explosive short squeeze, as we've stated here, we can get some of the biggest and best parabolic short squeezes typically will come after a day 3 shorts are triggered in the market, low of week or low of month. They won't all be the same size, but if we have a 3-day setup, these are the trades that I watch and wait for. One of these every few weeks can have a significant impact on your overall results. A setup that has day 3 shorts in the market can potentially be a massive parabolic move. Now, we won't always get that. So for today's video, I really want you to take one thing home. In particular, a take home is levels. Levels, 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 timings, and levels. Now, I also want to point out that every single trader has this information in front of them. How they choose to perceive it and act upon it is of their own volition, which is why they call it discretionary trading. So traders will often justify their trades based on whatever their beliefs are. And I repeat the phrase, what setup are you hunting, for that very specific reason. As I talk about, you can use SMC, you can use order blocks, gaps, sweeps, hunts, runs, soups, confluences, all these other things, which are fantastic, because if you're making money from any of those, keep doing what you're doing. When I ask what setup are you hunting that's rinse and repeat, I mean exactly that. What setup are you hunting that's rinse and repeat? if you can't rinse and repeat it, and it's not simple for you to reproduce those results, then you're going to have haphazard results, 50-50, back and forth, win some, lose some. You'll continue to meander through the retail trading abyss. Now let's go back to the beginning of the month on the euro. And you've heard me say this. If you're going to sell, you want to be selling high at the top of the box. Market forms a box, whether that's the first day, the first week, whatever. We want to sell high, or if we're buying, we want to buy low. Now this market broke down and was making lower lows and lower highs as we headed into last week. That market continued to break down, which brings us to this week. A market continued to break down, and we're at the low of the month on Wednesday, day 3. Now, one trader's comment was, yeah, but this was bearish. It really wasn't fair. Trump's announcement caused this and that. And I'm going to say this, and you can take it however you want. Trump had nothing to do with the setup. The setup was already in place. It may have accelerated the move, but the market was already set up for an explosive move. We had a market that closed in breakout. Remember what I just said. It's Wednesday, day 3. Tuesday, day 2 forms our initial balance, and in a high percentage of cases, one of these extremes may tend to hold as the extreme boundary for the week. We had a market making lower lows and lower highs that exploded vertically after CPI on Tuesday, closed in breakout. How does price behave and set up on the day? Remember, if we're targeting daily ranges, take a look at the first couple of days. We have markets that failed to get to the other side of a daily range. It broke down and closed in breakout. Now, if we're going to target a daily range, wouldn't we want to either be buying the low of a daily range, if it's a reversal, targeting the high of the daily range, or selling the high of a daily range and targeting the low of the daily range as a reversal setup? If this was a trend trade setup, ideally, we would be looking for a market to give us a sell high setup. Now, this is the second day in a trading week that made lower lows and lower highs. And this is an example of where timing window, traders had a day 2 range expansion in line with our opening range. But when we get to Wednesday, day 3, there are 2 types of setups we can look for: reversals or trend trade setups in a well-engineered template. Now here's the question: how did price set up on the day? Now again, I don't care what anybody thinks. They don't have to agree with me. They don't have to disagree. But the same things are going to happen again and again and again, regardless of the instrument. Because 2 things are going to be constant in any market, regardless of what instrument you trade. We're always going to have a high and a low, and we're always going to have day 1, day 2, day 3, because Wednesday's day 3 on the front side of the week, every single week. The instruments are relevant, but this setup can show up again and again and again. And the beautiful thing is that the time of day is going to be constant as well. We're going to have a 9:30 New York Open. Now, if traders didn't see this, or they didn't feel like they had time, number 1, what was the signal? It's Wednesday, day 3. But number 2, we've broken out of the low of month level. Now, the next best part is that we've gotten to the end of the 10 a.m. hour. But if we zoom in here and just take a closer look, not only have we got a large engulfment candle for an explosive setup, but we've also got a pin hammer to follow to tighten our risk up even more. If traders waited, we had a pin hammer to follow. This is a 5-minute chart. We have a level. We're in our timing window. How is price behaving? Well, we've got a large explosive engulfment, but then we've also got a pin hammer. Now, basic model for trade entry criteria, page 29 in the playbook confirms both candles for an entry. Where's our target? The other level. So I'm going to repeat this again too. You can make trading a pursuit of pleasure, or you can make it a difficult, complicated science project. But when you work level to level, you eliminate 90% of garbage and 50-50 type of trading, whether you win them or lose them. The instrument is irrelevant. The levels are constant. The days of the week are constant. The time of the day is constant. What setup are you hunting? If you're inside, well, what setup is that? But if you stick to the levels until you master the basic setups, this can make a significant difference on your trading results. We had the Swiss franc. We had our opening range on Monday. Day 2 typically expands the range. We had a market that closed in breakout, which is also a signal. Markets closing in breakout continued to trade higher. Trading higher, CPI, we redraw our level, and we have an engulfment candle right at the end of our 10 a.m. hour, closing at 11 a.m. Again, you can make trading as pleasurable or complicated as you want. Entry, stop loss, and a take profit level. It's as simple as that. Now, the question always remains is what setup are you hunting, whether it's reversals or trend trades. There were traders in the London session who took an early entry into the trend breakout in a market already in breakout. There were traders in the New York session that were waiting for a sign for a reversal setup. Day 1, day 2, day 3. CPI on day 2, PPI on day 3. Using the news to trap traders up high or down low and then reversing the market. British pound, low of month. Monday opening range, closing in breakout. Tuesday, day 2 after CPI, closing in breakout. Day 1, day 2, day 3, explosive reversal. Now, traders again are convinced that this is as a result of Trump. Now, let me ask you a question. Do you think that that's random? Is any of that relevant? Did you have a setup? And if it's not your setup, don't worry about it. But this is a parabolic short squeeze setup. Timings, levels, behavior of price. Low of month, closing in breakout, day 1, day 2, day 3, trapping traders down low for the explosive parabolic reversal. Level to level. Level to level. So if you're targeting a daily level and you're taking trades on the inside, how are you targeting level to level? If the large candle scared you out of getting into any of these trades, the follow-up candle was a pin hammer, allowing traders to take an entry in an explosive reversal setup, tightening their risk for a level-to-level opportunity. Timings, levels, behavior of price. Now again, if traders don't agree or disagree is irrelevant because the same things are going to happen again and again and again. And they're going to say the same thing next time. It was because of this, it was because of that. That's great. But what setup are you hunting? We're at the low of the month, day 1, day 2, day 3. 2 types of setups on a day 3, trend trade or reversal. What type of setup do we have? It's a dump, coil, and pump parabolic reversal, level to level. Now just a quick look at the indexes. We have a high of the week level and the low of the week level in place. And that means that we were inside on Wednesday, day 3. Contrasting that with the currency pairs that we just looked at where we were at monthly extremes. So just using the phrase diddling in the middle. There were opportunities inside. We're inside though. But again, I suggest leaving that to traders who have the skill, experience, and wherewithal to know what they were hunting in this particular case. Otherwise, you're inside. Dow was an inside week last week. We've already triggered breakout traders on Monday, day 1, the opening range with lower lows, pumping and coiling and dumping after CPI yesterday, breaking down, lower lows again, pumping back up. But we're in a market now that's inside of a previous trading range. And what I mean by that is we've traded higher and now we're dumping back down into higher time frame longs. S&P was inside, dumping down to the low of week level from the previous week, acknowledging the difference between the indexes and the currency pairs, which were short squeeze setups into the low of month level. We have day 1, day 2, day 3 shorts in the market pumping down. Are they working the high or are they working the low? Again, maybe a first green day signal on Wednesday, our midpoint range of the week. Now, gold closed in breakout on Friday. Friday is the closing range of the week. Monday traded higher, taking out the high of month level from 2 weeks ago before reversing on Monday, day one, the opening range. We have day one. Day two, we had a first red day on Monday. Again, levels. So an example of where we have a first red day signal on Monday. That's our first day after the signal day, and we had a parabolic opportunity for traders after CPI, the low-hanging fruit continuation. But I want to point out the obvious again. We had our low of week level from the previous week on Wednesday. Thursday broke out and continued in breakout. So we have breakout traders in the market now. Wednesday was our reset day. Day one, day two, day three, after a first green day signal. So Friday's our closing range. We traded higher highs. So I want traders to understand we have breakout traders long in the market driving this move. We made higher highs on Monday, our opening range. Closing as a first red day, they dump it down into the breakout. Dumping. We have shorts in the market in our New York session. Monday, day one. Day two expands our opening range, trading lower and closing in breakout. Day one, day two, day three. Day two, closing in breakout. Day three. What type of template is setting up? So remember what I just said. We have higher time frame longs in the market. We have higher level longs stopped out. Day one, day two, dumping down. Day one, day two, day three. Which is all great, but what type of setup do we have? So when I talk about diddling in the middle, I'm talking about avoiding this. We're on the third day from the high. If you're selling on day three down low, nail and bail if you took a trade. But let me just go back for a second. We'll go to a 50-minute chart. I want you to understand, you're not selling up high. You're not selling up high. You want to sell at the top of the box. When you're selling on day three at the bottom of the box, guess what? You might be getting jammed in. I want to sell at a level. I don't want to sell inside. If I'm selling inside, I want to be at a level. If I can't get at the level, it's going to be day two. I want to be low-hanging fruit. Guess what happens? After we break out, breakout, pull back, continuation in our 10 a.m. club, end of the hour, pin hammer, in line with our basic model for trade entry criteria in a market that's already broken down. Breakout, pullback, continuation for easy free cash on day two. Now remember, we're selling on the second day of the template on Tuesday after major red news. But when we come into Wednesday, we're selling down low. We want to be selling up high. So when they jam traders in and the market sets up, some traders said, oh, it was too fast, it was too violent. Let's go back to some simple things about timing. Remember, time of day. In a lot of cases, you can sit around and do nothing until 10 a.m. We have our engulfment and a pin hammer. Engulfment and pin hammer. Now we have another engulfment, and then the explosive move. We're already heading into the end of the third hour. Day one, day two, day three. Timings, levels, behavior of price. Behavior of the trader. Targeting level to level. An explosive short squeeze setup for traders on several instruments today. Now I want to say one thing in closing. Master your behavior and your emotions and your beliefs about the market and master your edge. But if you're targeting setups that work from the levels, I repeat this, the daily time frame is the smallest time frame I'm working from. It's the levels, the timings, the behavior of price, the setup. Now, I could be on a 1-minute chart. That doesn't mean I'm trading 1-minute trades. I'm trading the setup on the higher time frame at the level. I can get in on any time frame. It's the level and the timings. What setup do I have? If we're targeting asymmetrical risk reward, I want to get the best fill price at the level in the timing window, targeting the opposite side of the range when and if that setup presents. Regardless if it's a first red day setup, a first green day setup, an inside day setup for a reversal or trend trades. Range expansions will go 100% expansions of daily levels. Get away from chasing stuff with little minutia. and pushes and sweeps and curls and swings and all these things. Rinse and repeat. You can put these levels anywhere, any instrument, the same setup, because these levels are constant. The time of day is constant. The days of the week are constant. The setups will rinse and repeat. The trader, when they're trading all kinds of other stuff based on candles, has got caught into the smoke and mirrors matrix. Chasing movement. Chasing movement will get you caught on the wrong side of a market that is potentially about to explode. And as Richard Dennis says, you can make a lot of money in a very short period of time. What you want to do in between is avoid suboptimal trades. Suboptimal trades versus 5-star scalable parabolic opportunities on the front side or the back side of the week. For traders who didn't think they had time because it happened too fast, well, this is a 15-minute chart in the timing window. So we're already into the third hour. We're into the third hour, and we have our signal bar, our pin hammer, entry, stop loss, and a take profit level. There was plenty of time. There was nothing too fast. It's whether or not traders were prepared and hunting a reversal explosive parabolic short squeeze on day 3 at the low of week level in a market that had already broken out. Congratulations to the traders who executed on these setups today. This is a 5-star opportunity, and we still have the backside of the week to play out. In between, sit on your hands. Don't engage in any random impulsive behavior. If you understand the power of these daily levels and the signal days, hunting best trade candidates becomes a pursuit of pleasure, and these setups can significantly compound your trading account. Doing nothing else in between is the real challenge, because a lot of traders want to take trades. They want to get in the market. They want to catch a move, as opposed to scaling into parabolic opportunities that will significantly grow their trading business. Have a great day, traders. Keep it simple. Let's get focused for the backside of the week. Have a great day, and may the markets go with you.